What's up, guys? Joe here again with another episode of the Joe Credit Show. Today, we're going to talk about should you pay off your car loan before your credit cards. I'm Joe Chavarria. Welcome to another episode of the Joe Credit Show. So today's topic is basically all around, assuming that you have quite a bit of unsecured debt or consumer debt, maybe you have a couple car loans or a couple personal loans, you have some credit cards, and you're thinking, okay, I need to get out of debt and I want to improve my credit, or maybe one or the other. Maybe I just focus on getting the debt, not too concerned about credit, or maybe you're more concerned about credit and you really want to make sure you got some money here and you want to really maximize your credit scores. So this video is going to be perfect for that, whether you're in either situation or even both scenarios, which I think the majority of the people watching this video will probably fall in both scenarios. I want to pay off my debt, but I also want to boost my credit scores at the same time. So this is going to be one of those videos that can be very helpful if you find yourself in that scenario. So first step, I want to talk about just being debt free, right? Being debt free in general, just getting out of debt. And should you pay off the loan first? Should you pay off the credit cards? What's the best way to go about it? So best thing to do is to first, itemize, get an itemized list of your debt. That's the best thing to do is first take into account, what do you have? So, I'm kind of old school, and maybe you are the same way. Maybe that's very helpful. A spreadsheet, an Excel spreadsheet would be fine, or just pen and paper will work just fine. Just put the name of the creditor you owe, the credit limit or the original financed amount, then put what is your current balance on that account, what is the minimum payment that's due, what's the interest rate, and what is your due date. Kind of get yourself organized and figure out how much debt you actually have out there, including what's your monthly minimum payment and what's your interest rate. And if the auto loan is one of the highest interest rates and the highest payments, then maybe that'd be the first part to tackle, right? Focus on getting that car loan paid off a lot faster. If it's not, generally credit cards are the higher rates, typically 20, 30%. Interest rates are very common when it comes to credit cards, okay? So generally your credit cards are going to be higher than your auto loan, but there are cases where, if the credit was really bad when you finance a new vehicle, then there's a good possibility that you got like a second or third chance financing bank to finance the vehicle where the rate's probably double digits as well. So just kind of take into account all your debt, the interest rates, the minimum payment. And if it's the credit cards that are the higher rates, then that's where you want to put more of your focus. Focus on paying off your high rate credit cards first, double down on some payments or put a little bit more money towards your highest rate credit card and get that paid off as soon as possible. It's kind of like the snowball effect. You focus on maybe the higher rate or even the higher debt. And once you have that one paid off, that minimum payment you were sending to that credit card company, go ahead and apply that now to the next credit card, so on and so forth. So for example, let's say your largest credit card or your highest interest rate credit card, let's say the minimum payment is $150 per month. Once that credit card is paid off, apply that $150 to the next credit card you're going to apply it to. Maybe that monthly minimum payment is like $80 a month, but now you're going to do 80 plus the $150, which is $230 per month. So instead of sending $80 a month to your second credit card, you're now sending $230 per month, so on and so forth. That's why it's called a snowball, because you're going to, eventually trickle down to some of the smaller ones that you've just been making minimums on, but all of a sudden you're gonna make big chunk payments like $300, $400, $500 monthly payments towards it, and that's gonna help pay it off a lot sooner. And along the way, your car loan will be paid off because it'll be included with one of the debts that's gonna be itemized you're gonna be paying off. So when it comes to credit, paying off an auto loan, like if you're like, okay, I really want to pay off my debt because the main purpose I want to pay off my debt is because I want to boost my credit score. And you may be thinking, well, if I go pay off my $10,000 auto loan, surely that's going to boost my credit score quite a bit because it's a big debt, right? The truth is not really, because when it comes to your open balances, what has more weight, what has more significance is your credit cards, your available credit. So that's where 30% of your score comes from, which is the utilization component of your credit score. And so auto loans there's no utilization component to it because it's not like a revolving line of credit or a line of credit where you can, you have a limit and you can use it as you please and borrow from it, so on and so forth. You can't really do that with an auto loan. Those are known as installment loans. Installments are where you finance a certain amount and that amount's paid back plus interest over a certain period of time in monthly installments. That's the term installment loan. That's where it comes from. And so you can't really do that with auto. And so when you pay off an auto or you pay off a large loan, you're not going to see that much of an increase in your credit score because that really doesn't tie into your utilization component of your score, which is a third of your score. Where you may see some benefit is going to be in the type of credit category, which is 10% of the FICO score. So 10% of your score is type of credit. And that basically the better you manage certain accounts like mortgages, auto, credit cards, the better you can manage and show that you can manage different types of accounts well, i.e. making monthly payments or paying them off in full. That will benefit 10% of your score, which is type of credit. So that's why some people, when they pay off an auto loan, they pay off a big auto loan, they usually don't see that big of an increase in the credit score if they even see one at all. And so that's why if your goal is, I really want to boost my credit score first, that's top priority, then you want to focus on the credit cards first, because that's where you're going to see bigger benefit to your credit score by paying down your credit card balances. Now, as I mentioned earlier, if your goal is to knock out both scenarios, like, you're not in a hurry for each one, you want to boost your score, but you also want to get out of debt faster, then that first scenario that I mentioned, which is take into account your credit cards and take into account your auto, and eventually you'll pay off that auto if you're following that snowball effect. That'd be the best route to go, because you're going to boost your credit scores. At the same time, you're going to get out of debt a lot faster following the snowball effect. So that's really what I wanted to talk about today, is just kind of the dilemma some people have, which is, they got a big auto loan. They're like, let me go pay that off, and I'm going to boost my credit score by paying that off because it's a big debt. Really trying to save you a lot of time, a lot of money, a lot of headache by going that route, because, you're not going to see a big benefit, if at all, to your credit score. So if you want to boost your credit score, but you also have credit card debt, you want to focus there. All right, so that's my time today. I'm Joe Chavarria. I hope you enjoyed this video. If you did, give me a thumbs up. Let me know what you thought about this video in the comment section as well. If you have any questions pertaining to your credit or just any general questions, also feel free to drop them in the comment section. I do personally respond to most of my comments in the comment section, so let me know what you think in the comment section. Also, if you are stuck with your credit, it's a handful for you, you don't really know what to do with it, you want to improve it, you just don't know how, or you just don't have the time, no worries, I'm here to help you. If you go to joechavarria.com/links, and we'll put the link somewhere in the description somewhere, joechavarria.com/links, I got a lot of free information out there for you, guides, resources, newsletters, a lot of content like that I created is archived there on my website as well. You can even get a free credit consultation scheduled. If you go to my website, you'll see a button there to say schedule free credit consultation. And one of my team members at the credit agents will review your credit report with you. They'll tell you exactly what you need to do to boost your score, what they would do if they were to take you on as a client, and of course, a quote if you wanted to hire them to just fix the credit for you. But they'll explain to you what's wrong with your credit, how to go about it, what you want to tackle. They'll do all that for free and complimentary to you. So they'll educate you on how to fix your own credit if you want to do it yourself. If you want to just hire them to do all the legwork for you, they'll provide you with a free quote and what it will cost to hire those guys. Okay, guys, so again, that's my time. Joe Chavarria here signing off. I'll see you guys on the next one. Take care.